Welcome to the Pipnotic Symposium for the 9th of April 2018. Today we're going to cover a few different things. First of all, we're going to cover some chart configuration stuff, because I know some people have been having some troubles seeing the accumulation candles and the price imbalance candles. So let's do that quickly. Okay, so when you let me delete both of these. When you open a chart, your charts may look like this, or they may look like something else. I like to have mine blue for the bullish bars and red for the bearish bars, but you can customize this to suit your needs. Ultimately, you right click on the chart, you go to the properties, and here you can define the different colors: bar up, dodger blue; bar down, tomato. Then we have the bull candle and the bear candle there. You can put these to whatever you want. Another thing here, if you go to the common tab, it's important that chart on foreground is unchecked. If it is not, then you won't be able to see the accumulation candles. So once you install the indicator, I have it installed by default, I'll go like that, you'll see that you can see these candles. But if that setting I mentioned a second ago is checked, then you won't be able to see them. Okay, so you have to make sure that this is set, otherwise you'll be wondering where the accumulation candles and the extended range candles are. So uncheck, check on foreground, like so, then you can see them. Okay, so that's that. As I mentioned, I like the background, the black background. I used to use white, but I found it to be quite hard on my eyes, and so I just changed it to the black background. So super simple. Okay, good. Let's do this again, and we'll have a look at some trades that we had on. We had a buy on this one just here. I dragged it on here, and we bought here, and we got out of the trade here. So first of all, why would we want to buy here? Well, if we look at this is important to us here. So until price came back to this level, price had already been back to this level here. And so ideally you wouldn't want to buy for a price any more expensive than the low here for this price imbalance. And if we go to the larger time frames, you can see that this is actually an area that's been revisited quite a few times in the past. We have this area here. It's a nice pattern. Price came back to it once, twice, three times. See, and you can see each time price went a little bit deeper, and now it looks like we're maybe going to either revisit these lows before we continue higher, or try and find some other area that we could where we could find enough buying pressure to drive price higher. So we put it here, and this was simply at the lows of this, the nice pattern. Price came there, we had a bit of a bounce. It was only a small one, it was just a 1-to-1, or did I move this one? Maybe a 1-to-2, 1-to-1.5, something like that. Let me see here. So we had 34 pips in risk. We had just shy of 60, so about a 1-to-2. So I took the first one off here, and then the second one was up here, which was just a little bit higher. So price went all the way up to here, came back down here, then it returned to it here before it finally fed off. And so I just clicked out of these trades because we'd kind of already passed the 1-to-1, so I just wanted to see what happened. So that's what we have there. Super. Now we have another trade on. Let's have a look at this one. Let's put default on here, and let's have a look at this. Okay, I mean, why would we want to put a trade on there? So if we put a line here, you can see for this price structure here, the origin of this move is here, and so ideally we want to look here. Ideally, what we would do is we would do this. We'd put this down here. We'd have a close look at this to see if this is independently established or if it's reacting to something else. And in order to do that, we're going to have to go into the higher time frame, the daily time frame. You can see, as a matter of fact, price has been back down there here. So the fresh area of demand is down here on the daily chart. So I am going to put a position on just here. So we've got that one in. Refresh. And notice also we're trading in line with these interest rate swaps, which is great. So holding the trades overnight gives us a little bit of swaps. You can see we've started to gather a little bit here. So we are at 0.24 lots. We're buying, and we are buying at the 97. We'll say 97.49, 50. So we're close to the 50 area. We've got the spreads in there. The stop is 97.11. And the target, we'll figure that out in just a second. And this is going to be, this is a daily demand. We'll put it like that, like so. So you've got a entry, stop, and the target. We can move the target maybe up here, because here we have kind of the wicks pulling back, kind of pointing to the edge of an area there. So we'll leave that like that, and I think that looks pretty good. So this one here is not that interesting of an area. Why? Because price has already been back here. So ideally, I mean, you look at the price structure. We have this one here, and price has reacted to these levels on the way down. I mean, you can see we had this pullback here. Price tested it. We reacted. You don't test it. You don't trade it again. Price went through it on the second time. Came back to this one. We had a bounce. Price came back to this one here. Of these two. You see here we had a rejection. Now price is looking to challenge the lows here. So ideally we want to buy at a price no more expensive than the lows of this pullback, which brings us down to this here. Here we have the beginning of the buy zone, and here we have the thicket of the buy zone here. Okay. So that's what we do. So we leave it on like that, and that looks fine for the time being. So I mean, price can come down here. We can kind of sit around in the area for a little while, and then potentially move higher off here. But we'll have to wait and see. I'm not going to touch this. I'm going to either let it hit its target or get stopped out, because we need to look at what we're doing, and we need to stick to a like the same plan in order to have a proper sample size. But gradually we're going to start putting on trades like this one that are a little bit better, and so the quality of the trades is going up, and so the number of losers will go down and the number of winners will go up. And then once we've managed to identify like a pretty good method by which we are hitting our targets more than we're hitting our stops, then we can start to fiddle with the risk reward multiplier, and this will ultimately enable us to get some pretty nice profits. Okay, because we've got that one on, we'll leave that there. Let's have a look what else we have. We quite a lot of positions on there. Let's have a look here at the euro. Let's go to the 4-hour chart. See what's going on. We've got this one here, which I like. We also have, again, if we look here, you can see we have this move that goes up and it comes down, and you can see here that the price came back to is here. And so this is actually the area that you'd want to look to start to buy. And we're going to put this on just because we want to engage in the market a little bit. We have this little one here. We're going to put on a trade. We're going to put it a little bit below. Put it like that. We're going to put that on there. So 56 pips. This is a 4-hour demand. So let's put in the position size, which is 0.13 lots. We're going to buy, and we're going to buy at the 121.50, 21.50, and the stop is 120.95. This is a 4-hour demand. And the target we'll do in a sec. So we've got like that. That looks pretty interesting. If you look at this, you can see that it looks pretty nice because we had a nice bounce from here, and so we had this one, price left, price returned to this pullback. So not going to take it again. We're looking lower. We did look lower, which brings us to this one here. Price had a bounce here. Price went up, it pulled back, came up, went down. We could have taken this one on the first one, not this one. Then price came down, went a little bit deeper. Then it came up, it came back down, it left, it came back to this level here. So you don't take it the second time. It had a little bounce, but it moved through it, and it tested this here. And now price is looking for a deeper pullback. So we could start to react down here. This is a really nice area here, but keep in mind that price has already been, this is price retracing back to this one here. So the fresh liquidity is below this low just here. I'm just going to pause the video for a second and pull some slides up that I did just a second ago. Okay, so I did a presentation here in Copenhagen about, it was a workshop, a 2-hour workshop about currency trading. We focused on a few different things, and ultimately if trading is about asking questions. And what are questions when you run them through like this? Well, ultimately it's a checklist. And so we have these questions that we ask. I mean, this is just a question that enables us to focus on what liquidity looks like on a price chart. And as you can see here, I mean, you can't see it, and so it's really difficult to spot, but you can see the clues that price leaves behind as it moves around these small pockets of liquidity. And then we have this one here, what's currently driving price. I mean, what does that even mean? Well, it means that we have to pay attention to greater period areas of supply and demand, as this enables us to assess where the major flows are. So if we look, let's go to this kind of a shorter term talk. So let's have a look at this and see if we can have a closer look. Well, you can see here, I mean, price, we have this current move here. So price came down, it went up, it came down, it went up, it came down, it went up. So if you want to focus on this, if this is the most recent move, which it is on the half-an-hour chart, you can see it comes down here. Mark off the lows like so. Refresh, there we are. You go to the 1-hour chart, then you see where did price come back to? It actually came back to this. What does that mean? Well, that means that we can perhaps start to buy from here. So we'll do that. We'll just put this one on, because this is going to be a little bit different than some of the other trades that we've been taking. Because, I mean, the reason that this is important is because, I mean, why did price go up and then come back and move away from this area here all the way up to here? Well, that's because that there's a lot of buying going on here, or some buying going on at least. And so around the 95.20 area, people looking to buy. So if people are looking to buy this much at the lows here, don't we think they're going to be buying at least that much once price comes below that price? If this was a good price, an attractive price for the dollar franc, well, wouldn't a lower price be even more attractive? And so that's ultimately what we're trying to find out. And so spotting these big pullbacks tells us this. So here we had this area here. So price left, price came back down to it. So if price is able to leave this area like that, don't you think that if price comes below that, there's going to be even more buying, and potentially so? And so that's what these questions are all about. Okay, so we're going to put this one on here. We don't know what's going to happen. The sentiment might change by the time price gets back here. But we're going to put this on because this will be interesting to see and analyze down the road. So I'm going to put this one on. This is almost half a lot. This is hourly demand. We're pending. We're buying at 95.20, 9,500 stop. Let's have a look at that. Got that. So now we've got that. Okay. Good. So let's go back to the slides and have a look. Where is the origin of the current move? We just talked about the origin of the current move. On the smaller time frames, this is going to be the current move. But on the weekly chart, this is going to be the current move. Okay. On the monthly chart, it's the same. This is going to be the current move. So we have the high here and the low. So price zigzag down like so. On the 5-minute chart, it's going to look completely different. So this is going to be the current move. So what you do here is you simply mark off the high like that. Go to a bigger time frame, or simply scroll back and ask yourself, well, I mean, what's price doing up there? Has price been back there? And you can see, yes, it has been back there. It's been back to this level here and here. So supply, testing supply once, twice, 3 times, and then down. And so you don't want to sell for a price any cheaper than kind of the highs of these pullbacks, which brings us up to this little one here. So I'd probably be more interested in selling from here and up than I would somewhere in here. And interest rate swaps, they're green, so you want to be buying. So here we want to pay attention to the price levels, the demand below price, because this is going to support our long buys here according to the interest rate swaps, and they're pretty big here. I mean, you're going to earn $4 a day plus 3 times that on Wednesdays per standard lot just by holding the trade open. Okay, let's look at another example here. We go to the Aussie US dollar, and interest rate swaps are up, so on the big time frames this is probably going to be wriggling higher. You can see it's wriggling higher here, and so we have this one here, price left, it came back down and it reacted to this. So don't you think if price managers move below this low, there's going to be an interest in buying? I think there probably will be. And so the buy zone on this weekly chart begins somewhere in this swing low here and moves down through this monthly and weekly area of demand. But you can go down to the smaller time frames if you don't want to wait that long, and you can do the same thing there. You can say, okay, what's going on? Okay, just let that ice cream truck pass. Good. So you can look here and you can see the origin of a move. Well, we have a high here, we have a low here. So this is the origin of this move lower. Price is moving lower here, you can see. You see that we have the rectangles that are above price. We have some smaller ones just below price. And so ideally you want to be focusing up here. And so you would have a look at this. You'd mark this off. Price came back to this area there. So what does that mean? That means that you don't want to be selling for a price any more expensive than the highest test to this area of supply, because this is where the area starts, just here. Price came close to it, went down, and now price is kind of wriggling sideways from here. We have this little area here, and price is kind of testing that. Now we had a test, we had a low, deeper low, deeper low. So this is getting gnawed through, and that's going to bring us to this area here. You can see for this move here, I mean, the price is moving higher very, very gradually. You can see that we have this area here. So ideally, you want to look in here. This is like going to be probably a 15 or a 30-minute area of demand. If we look at that, you can see it right there. It's just here. Oops, wrong shape. Like so, like that. Okay, so price has been there almost once. It's almost been there once. What do you think it's going to do next time? Well, you know what? We're going to put a trade on and have a look. As a matter of fact, we might even be able to see that now. And I'm not paying attention to the news because that's kind of a different lesson. We'll look at that later. But we're going to put on this 15-minute demand. And these smaller areas can get ripped to pieces very quickly, so we're just going to keep that in mind. And we might move this lower. Let's have a look first of all. So we have 50, 76.50, 76.40. So we got that. Before we get too excited, we're going to move this down here to the low. We're going to see what's going on. Okay, so this is a pretty important low. You can see this is actually the lowest low from what we can see on the chart. If you go to the daily chart, you can see what's going on. You can see here that this is just having a bounce on this little period of accumulation prior to the big release. And so what does that mean? Well, that means that price is probably going to move close to the low here before it finds fresh liquidity. So buying now is a little bit risky. Why? Well, because sentiment is moving price low. You can see that price is moving lower. Okay, so you have to be very careful. So this is a very high risk trade. If you want to make it a better risk, then we're going to have a closer look at that and see. But this is like a small time frame one. This is actually a 15-minute area that we're looking at. So we'll have a look and we'll see what happens. We've got a little entry there. We can move it. just to the low. We can see what happens. I'm going to set this one to expire in a couple of hours. 1, 2, 3. Set it to expire in 3 hours. In 3 hours, I don't want to leave 50-minute areas, sorry, 50-minute orders on the market because these are going to get washed out. So we'll leave that on. If it's not filled by then we'll leave it alone. But we'll have a look. We'll open up another chart and we'll have a look and see what. We'll come back to that in a second. Maybe it'll be filled. Okay, let's have a look at another one. As a matter of fact, let's go back to the slides quick. Where has price not been? Well, we kind of answered that if we look at this. So, okay, price, let's go to the smaller time frames. Okay, price is moving down. You can see that we have, this is the high, this is the origin of this move. Okay, super important. This is the origin of this move. Very important. So you focus on the origin. Okay, this is the beginning of the sell zone. So yes, you can sell here and here and here and here and here and here, but these are going to be trades that you're going to have to manage pretty actively. But if you're looking up here, then you're focusing on the major swings. So we put this up here, mark off the high like so. We zoom out a little. There's nothing there. We'll have to go to the 4-hour chart. Nothing there. Daily chart. Okay, this is good. So ideally, you can see that we have this high here, but this is not a good area to sell. And why is it not a good area to sell? Well, it's not a good area to sell because the flows are moving higher. That means that when you see this, that you do not try to sell bleeding edge supply, but you look to the leg, the origin, and the move lower. You look to the leg that brought price down. What does that do? Well, that brings our attention to this. So this is area where you would sell, somewhere in here. Not here. This is not a good area because price is likely going to keep moving higher. And I know that some of you got caught in a Euro USD trade a while ago, which did the exact same thing where we had a pattern similar to this, and people said, oh great, we had a nice area of supply, nice release. People started to sell here, but what did price do? Well, we had the swing here. What did price do? It kept going higher and higher and higher. So you have to be careful about these. These are traps. And this is the stuff that you want to focus on. So if we remove all of that, and we just go over to the Euro just for a second and have a look at that one. And it was this one here. This is the one here that people were, let me see, this one here. It was this area here that people were selling at. So people were looking to sell somewhere around here, which is not a good idea. Price came up to it, we had a bit of a reaction, but price kept moving higher. We go here and we have a look, you can see that price tested this accumulation and we went a little bit deeper, went really far into this area here, but I still wouldn't sell. Until price got higher and as high, and as high as this, the high of this candle right here. This is the beginning of the sell zone. So I'd put my area to sell. I'll put it in right there, like so. Matter of fact, we can do that. I don't even know if we have enough money in this account. Yeah, it's going to be pretty tiny. So what we can do is we'll go to the daily chart and refine that just a little. And here you can see that, this is also a pullback. What do pullbacks do? They clean out liquidity. So we're going to put it in like this. Okay, this is going to be the entry. I got on the weekly so you can see it. Yeah, still the same. Little tiny position, but we'll do that anyway. Also, interest rate swaps are going down. Swap short, €6 per lot. That's a lot. Swap long, you can be paying that. That's a lot. So you don't want to pay that. We don't have big positions, but it'll add up over time. So this is going to be a sell. This is actually a weekly supply. Sell limit, we're going to be selling at 27.48. 27.48. Stops at 29.59. Sell limit, and we're going to remove that. We're going to remove this one. We're going to leave this one. This is the one that's in place. You can see now I'm starting to remove orders. I prefer this one. Okay, this looks interesting. This is also in a level here, support, price broke through it, resistance, then left, and so, I mean, this is a little bit of an interesting area. You can actually see, yeah, we'll leave that and we'll see what happens there. But I think if price managers come through there, we're probably going to have at least a small bounce. Good. Okay, let's have a look at the these slides again and have another look. What else is there? Where are retail stops located? We talked about this last time as well. And if you look at this, say that, okay, that's fine. You look at this, you say yes. Okay, good. I wanna sell here. Where are the retail guys going to have their stops? So they're going to have their stops above this kind of swing point. Why is that a problem? Well, that's a problem because ultimately, assuming that a bank has an order to sell, let's say 700 lots, they want to sell 700 lots of this area right here. Okay, that's a lot. But let's assume that there isn't that much in the market. There's only 500 up to this level here. What do? Where do they get the rest, the remaining 200? Well, they know that the retail guys have their stops up here, and they know that there's probably going to be a lot of them. And so if price is pushed through this level, what's going to happen? Well, it's going to trigger all of those people's stops. And so people who are selling, they're going to be buying back. And so when the stops are hit, bearish liquidity will be flooded into the market in the form of the stops being hit. And this will potentially be big enough to fill those 200 lots that are waiting to be filled. And so up here they can't fill the orders, but up here they can fill the order because they have, of course, they have a better price, a higher price at which to sell, and also they have released a liquidity into the market by hitting these stops. And so what they'll do is they'll typically buy, they'll put some money on the table, they'll buy to drive price higher, and then when price comes up here, they'll hit the stops, they'll close out their order, and then they'll start selling, and then they'll typically be able to fill the entire order or pretty close to it at a given level where they know that the retail market has their stops. And this is another good area here. There's going to be some stops up here if price comes back up to here at some point. They know that if they want to get their orders filled and there isn't enough, they're going to push price up and then down, like so. That's what the whole thing of like MACD divergence, for example, where you have price going higher like this, and you have kind of like the MACD or some other oscillators doing something differently, like so. That's kind of the same thing going on, where, I mean, price, this is kind of artificial. So a divergence is actually showing artificial price movements, which is like stop hunting or looking for liquidity. And so price is going higher, but it shouldn't be going higher. What does that mean? Well, that means that it's likely a place where stops are being hunted to seek liquidity. So the big banks are seeking liquidity in the form of stops. They know that these major swing highs, price will typically find that liquidity and fill the orders that they need filling. So when you see stuff like that, either using the MACD or one of these other tools that we have here that we can use, the histogram is a really good one. This one here. Let's see if we can find an example. And you can kind of see it going on here, how you have kind of prices moving lower, but it's moving higher. Let's move to a bigger one. Here you can see this is kind of a similar thing going on, where you have lows, lower lows, and higher lows in the strength. What does that mean? Well, that means that price is artificially being pushed lower. What is it being pushed below? Here. So price has already come back to this level here. Ideally, price would just kind of rest in and around this area and then turn around. But there's not enough liquidity in here. Price has to go beyond that. So price goes down here beyond this swing low. We hit stops. It dumps bullish liquidity into the market. The banks scoop it up, fill their orders, and this is typically enough to drive price high. And you can see we had a nice release higher here. And this is telling us that, that there was a lot of buying going on at the level just here. Ideally, this is of course on a macro level, but this is fractal, so this is happening on all time frames and all times. And so this is a 4-hour chart. But if you go to, I don't know if we can see anything. If you go to like a bigger time frame, this is not a good example, then you'll see the same thing happening there. On a smaller time frame, you'll see same thing happening there. So you can go to a smaller time frame and you can see kind of a similar thing happening, where you have a low, okay, but these aren't telling the same story. We have a low here and a low here. This is moving down. We have a low here. We have a low here, and this is moving higher. So this is telling us that this is an artificial push lower in price. Okay, because the strength of the indicator is not supporting that this currency pair should be continuing to move lower. Okay, and so this is a clue that this is exactly what's going on. So when you see divergence like that happening at an area where we can expect price to turn around, it's just price looking for stops to push price in the opposite direction. Okay, good. Let's have a look here. What else do we have? Yeah, that's kind of what I had here. But we talked about stuff like this, where you have, I like to call it, I really like this term called price mobility. And price is very mobile around market price. Price moves up and down with no problem at all. It goes up and down all the time here. If you go like this, you can see price is just moving around. It's Monday today, so price is really slow. Let's see if we can find a better pair. Yeah, let's see. It moves a bit. Price is having no trouble at all moving below these lows and above these highs. It does it with absolute ease. Higher and lower, higher and lower. It's happening all the time. But as you move out to the extremes, here, price slows down. Price is not so mobile. It's very mobile in the middle, but when you get to the extremes of the markets, we have the highs and the lows. Liquidity thickens. You can see here we have liquidity picks up, and then price has a much more difficult time moving beyond those. And so you'll see these really big, nice, smooth price swings around price. But when price goes to the extremes, up, then it'll snap back. Down, it'll snap back. You can see that a little bit here. I tried to illustrate that at least. And this is simply just telling you that yes, there's a lot of liquidity there. You see when price went all the way up here, it snapped back. But in the middle, price has no trouble at all moving higher and lower. It does it with ease. But it goes down here and it comes back. It comes down again, it moves back. So when price comes down to the extremes, it snaps back. Why? Because there's more buying here, more selling here than there is in the middle. You can see how when price stays where it is, it can go both higher and lower with ease. And so you can just trade in the middle, and I know a couple of people that do this, how they just scatter their orders in and around kind of the mean. And so they're just buying and selling as price does its natural thing. It seeks liquidity at the mean. Give me 2 seconds. I'm just going to see if I can find an indicator that can actually, I think I can do it here. I just need a regression. Yeah, this is good. So if we go, I don't know, let's go like this, for example. So this is our mean, okay? So we have the high. We got this. Okay, so price is moving lower. But notice what it does when it gets to the extremes of the channel. It comes to the top, it comes down quickly. It gets to the other side of the channel, it comes back quickly. Leaves, 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 leaves. And now we seem to be moving a little bit higher. But in the middle, like, it has no trouble at all about when it reverts to the mean or is moving around at roughly where the mean is, kind of in the middle here, you can see the price does a pretty good job of just kind of moving up and down, kind of moving up to the mean, then through it, then back down to it. But when it comes out to the edge, it kind of pokes back quicker. See, now it's kind of hanging around the mean. It comes out of the mean close to the edge, and it pops back. And so this is just like a really good illustration of exactly what we just saw on that slide. And that's simply the price moves smoothly at market, and it moves, it's more volatile at the extremes where liquidity picks up, because price pokes into an area and we have enormous opposing order flows. Boom, price shoots back. And so this is pretty much what's going on. Good. Okay, super duper. Yeah, well, we have a couple of orders on. We're slowly going to start moving our, yeah, we got this one here. We're almost there. You see how, I mean, this time it went deeper. We had a low, a deeper low, and these are like the major swing lows. These little dots here, they're kind of signifying the major swing lows. So we have this one here. Price comes up, comes down, goes a little bit deeper. It comes a little bit deeper here. We have this one, it's challenged once, price goes a little bit deeper. You know what, I'm going to pause the video and we'll see what price does when it gets to this area. So just give me a few minutes and I'll come back after price returns to this area. Okay, back again. You can see, I mean, price came down to the edge of this area of hourly demand and it found something in there. So now it's having a little bit of a bounce. We shan't sit here and wait and risk me losing this recording because my computer goes to sleep. So I think I'll just wrap it up now. But I just want to, I mean, this is a tiny little move, of course, but on the minute chart you can probably see what it looked like. You can see how price kind of came down there, and now it's starting to move sideways for a while. And you can see that we have the strength that's going a little bit higher. And so maybe this will drift up and above from here. But then again, this is a 1 minute chart, which is a lot of noise going on. But I think it's a pretty good illustration about price just moving a little bit deeper. We had deep, deeper, 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 and we're getting close to these. And here we have price return to here, once, twice, a little bit deeper here, and it went a little bit deeper here to the lows of this accumulation, and then it left. And then we have these micro areas here, deeper, 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 deeper. And so price is going to have to come below this low to find liquidity to push price higher. I hope this makes sense because it's super important. And the fact that it's going on in between these big swings in here and in between this big swing in here is just showing you that it's happening on the macro level between the swings and on a macro level on these major swings here. So it's super, super interesting and really important. Good. Well, I'll wrap this up. Keep this a little bit short today, but I look forward to questions that you may have. If you have any, please fire them off in the Discord forum. And yeah, and otherwise, enjoy the spring. It's the sun has been blazing here in Copenhagen, which is really, really nice. And we had 18 degrees Celsius yesterday, which was marvelous. So I look forward to being able to get the Danish spring in now before we leave for Indonesia here late summer. So that's pretty cool. Anyway, I hope you're all doing exceedingly well. Speak to you soon. Bye-bye. Thanks for watching.